We're in a very data dependent world, so we'll have to continue to take a page from the Fed's book and wait and see.
Good morning. We had another tame reading on inflation this month. Headline and core inflation both came in below expectations, which is welcome news as we continue to monitor the potential impact of tariffs. Marta, you just analyzed the numbers. What's your take at a high level?
Well, Vanessa, the surprise factor was real with this report. So, just to give some color to that, Bloomberg reports that of its survey, none of the economists had core inflation coming in at just 0.1%. All expectations were for something larger. So, of course, the market reaction is risk on, equities are higher, and we're also seeing the odds increase a bit from the market's expectation standpoint, at least for a rate cut in September.
Yeah, a shift from what many were expecting for sure. Is this a sign, Marta, that the worst of the price pressures are behind us, or could we still see some bumps ahead as those tariffs continue to work through the system?
Sure. Well, certainly this has been a benign report, and it comes on the heels of a lot of economic data that has been more benign than expectations. But I think it really is a premature assumption to think that there's no impact from tariffs at all, particularly as it comes to inflation. In fact, in Q1 earnings season, we did see a number of different companies suggest that they would increase prices as tariffs began to hit their bottom lines. And so I think as we're looking at inflation, looking for that tariff effect within core goods over the course of time is something that's reasonable to expect. But remember that there are some counterbalancing forces. So, for example, shelter costs, housing costs, those have been on a long trend down, and that continues, and that could offset some of the increases from inflation within core goods. We could also see that more broadly within core services if wage pressures, as those come down, also release some of the pressure on the core services part of the inflation print.
Yeah, a lot to watch as we move into the summer, Marta. You've said before that your bigger concern with tariffs isn't so much the direct impact on inflation, but what they could mean for corporate profits. We just wrapped up earnings season. Any big takeaways there?
Yeah, that's absolutely correct. So while we did anticipate and continue to anticipate some impact somewhere on the inflation side from tariffs, our larger expectation has been within earnings and expecting some squeeze as those costs hit companies and as the consumer is maybe a bit more beleaguered and companies are less willing to push those costs along to those beleaguered consumers. When we look at Q1 earnings season, it was strong. So we look at FactSet numbers, for example, and they report double-digit earnings growth for the S&P 500 in the Q1 period. Mag 7 AI names particularly strong, but on an equal weighted basis, we do see some weakness from a guidance perspective with companies scaling back expectations. So there is some real-world impact from the changing economic environment that we're in. It's coming at a point where we're still on a very strong level, though. So it's a move down from high levels.
So, as we look towards the second half of the year, what's your outlook, especially with the Federal Reserve meeting right around the corner next week?
You know, what's interesting is with expectations as it comes to a Fed cut, increasingly over the past few weeks, we've been hearing more and more about no cuts for the course of 2025 as the Fed is in this wait and see mode between looking at the impact on the labor market and looking at the impact on inflation from the changing fiscal policies. But if we continue to see these benign inflation prints, that opens up space potentially for the Fed to move in 2025. Still, we're in a very data dependent world, so we'll have to continue to take a page from the Fed's book and wait and see.
Yeah, that wait and see theme continues, Marta. Always so insightful. Thank you so much. And don't forget, Marta's full Q2 outlook is coming soon, packed with insights to help you navigate the rest of the year. We're going to be back next week with a full analysis of the Fed's decision. Have a great day.